We had Mark Carney, the head of the Bank of England, give a speech earlier today in which he specifically referred to Smoot-Hawley and what happened there with protectionism. And one of the points he made was that countries like the United States and the UK, which have gone more over to a services economy, are disadvantaged compared, for example, with a Germany and a Japan, because a lot of the trade reform, the reduction of tariffs, have happened in the goods area, not the services one. And unless we get the services to catch up in terms of the loosening of tariff barriers, then we will always be at a disadvantage. Is he right?
I have not yet read Mark's speech, but I think it's a valuable point, and certainly some of the crucial steps in TPP were things like the protection of intellectual property, were various aspects of access for service producers. And yes, those are going to be very important things in trade agreements going forward. Look, what Mark Carney captured in that speech is a much broader truth, which is that the United States didn't have important protection against other countries' manufactured goods 35 years ago, before NAFTA, before the Uruguay round, before any of the trade agreements. And so the idea that somehow we're doing something dangerous by entering into trade agreements that's going to threaten American workers is really nonsense. The truth is that our trade agreements are very disproportionate, with other countries reducing their trade barriers much more than the United States reduces its trade barriers.
But does this hold the opportunity, at least, for real progress, for example, with China? Because right now, the Trump administration is negotiating a series of agreements, they say, with China. They've already had the first, and they really want to focus on services, particularly financial services. Is there an opportunity there for the United States in our bilateral relations with China on financial services?
I'm sure that it will be valuable to continue the discussions of opening. Frankly, I think the prism through which we view trade agreements should be U.S. jobs and U.S. incomes. And my sense is that much of what people talk about when they talk about financial services trade is basically businesses that may be headquartered in the United States doing more business in China with Chinese nationals as their employees. And so I'm not sure how much that really contributes to the U.S. economy. So I'm all for our succeeding, but as I look for negotiating priorities, I would look for issues that are going to go to the bottom line for the American middle class. And I'd be a little skeptical that financial services would be at the top of that list.